Good afternoon. Welcome to the SMB series. We're happy to have you back. I suspect a number of you dialed in last Thursday. I'm Jeremy Andrus, CEO of Trader Grills. I'm chairing the Silicon Slopes Economic Impact Committee, and we're happy to provide the second in what I believe will be a helpful and long series of deep dives that will be important topics for small businesses as we're wading through this moment. Um, First of all, we thought last week was a great success. We had a lot of feedback that there was some helpful content. We had about 600 people join during the segment last week, and over 3,300 who have viewed it since. So our intent is to be helpful. We're really passionate about providing answers that are helpful to you, that are relevant to what you're going through, and hopefully this one, as we transition from sort of applying to the PPP program to thinking about how are you going to spend the funds that you receive in a way that you can that they'll be forgiven, that can really support your business in the maximum way. That's our intent for today. We've got a great panel again. Really pleased to welcome back Stephen Brown, who's our moderator. Stephen is co-founder and COO of Ledger Gurus, who provides outsourced accounting services to other businesses, empowering them to build with better numbers. Also back by popular demand, Shane Edwards. Shane is a partner at Squire, the fastest growing accounting and business consulting firm in Utah. He provides CFO and transaction support services to private and publicly held companies. New this week, we have Scott Porter. Scott works in capital markets and technology, practices of Orrick, Harrington, and Sutcliffe. His clients include Cora, Warby Parker, Stripe, and The Gap. He lives in St. George. We've got Brent Beardall. Brent is the president and CEO of WaFd Bank, headquartered in Seattle, Washington. He joined WaFd in 2001 and served as CFO from 2003 to 2006, currently president and CEO. And we have Hila Dahan. Hila is the co-founder and principal analyst at 33 Sticks, an analytics company based out of Utah. They focus on consumer behavior and analytics. Incidentally, her company went through a PPP process. They were approved, but have not yet been funded. Happy to have a small business owner share her perspective of the process and how she's thinking about using the funds for her PPP loan. Before I turn it over to Stephen, we are going to do a poll. We would love to get some information from you, understand where you are in this process, so that we make sure that we tailor the commentary and the questions towards your needs. Also, please recognize that we are monitoring the comments and the questions in YouTube. There was great engagement last week. That's helpful to the panelists. We will make sure that we are providing the common threads of questions there, and hopeful that you will both participate in the poll as well as in the online forum. The poll should be live. There you go. And please do that as soon as you can. And with that, I will turn it over to Stephen Brown. Stephen, thank you.
Thanks, Jeremy. Yeah, so one of the things that we wanted to know right out the gate was what's your current PPP loan status? Some people don't realize that there's different phases. Some banks were very transparent. Others were so overwhelmed that they didn't have the ability to give a lot of feedback. But one, have you applied and have not heard? So if you to respond, you can either look at the top of the screen here. You have pollev.com/JohnB242. You can go to that website, or you can also text John B242 at 22333, and then you can respond with your answer. So the different stages, and this is a good opportunity to talk about the stages that you may or may not have known. John, can you put that back up again? We lost it. Can you share your screen again, John?
Just give me 1 sec. Sorry, my thing just crashed on me. I'll pull it right back up.
Uh-oh, your browser crashed. So we'd love to know where everybody was in the PPP loan process. What a lot of people didn't realize is there's a lot of stages. There's the application stage, which did not mean you got the loan. You then went to underwriting, which we're not asking here, but after that, your lender would take it to the SBA using their E-Trans system, which was up and down, according to many lenders I spoke with. And that's where your loan got secured, after which you would usually sign loan documents, after which you should get funds. Now, I've heard of different experiences. I had some clients like Chase, you put all sorts of stuff in the beginning, and then magically the money showed up, or it did not. Other banks had a very custom touch. And there was unfortunately a lot where you just heard crickets. You put out an application, you had no idea where you were. So we'd love to see where the experiences of the audience were. We'll just give a minute or two for you guys to respond. Also love to hear if you did not apply but still plan to, or have not applied but and do not plan to, which I think is going to be the most interesting response. All right, let's see how the results are shaping up. Wow. Is anybody on the panel surprised at what they're seeing?
Yeah, this is Brent. I'll say it. I'm shocked to see that the vast majority have applied and have been funded. Good for you guys.
Yeah, that's amazing.
Yeah.
That's good news.
Awesome.
Amazing.
Yeah, although keep in mind, given the topic of today, those who have been funded have particular interest in the deep dive topic.
That's true. That's true.
So you're saying it may not be a representative sample?
Oh, I wish it were.
That makes sense.
Okay. Awesome. We'll give it another 20 seconds or so. I'm going to add to the poll as well.
And Stephen, we'll keep this live so that people are aware. We'll continue to post in the chat, so that until we go to anything else on polling, people will continue to be able to contribute to the results here.
Awesome. Yeah, so it looks like we're getting a more a better distribution now that we've let it run for a bit. So very interesting. All right, we're going to talk a little bit about what it means to be in these different stages, where you might not have to panic, and where you should maybe consider things in the future. What I'm seeing is that most of you have already applied. So I'm not going to spend a lot of time recapping the program. We talked about that last week. So it looks like I'll just run through this really quick, because there are a few of you that are brand new. If you haven't responded, you can still respond. But again, you got the program, 2.5 times average monthly payroll, up to 10 million. It's based on an average monthly payroll cost. There's a forgiveness component. That's where we want to spend a good chunk of our time today. You know, the terms are really great. You're not going to find a loan like this probably ever. It's for small business. Now it's interesting. Small, 500 is a much different than a 5-person small business, but according to the SBA, we're all small. And included the sole proprietor independent contractor. I'd love to start there. This is an interesting point. The independent contractors and the self-employed were not able to apply till last Friday, and here we are, not even a week later, and the program, as I'm assuming many of you here have heard, the funding for the program is exhausted. There is a lot of discussion in Congress to add additional funding, but Brent, Shane, let's start with you, Brent. Were you guys processing a lot of self-employed and independent contractors this last week?
We have not been, because so many of the self-employed independent contractors were waiting to get in. And then it gets even worse than that, because the SBA, I think it was just Tuesday of this week, came out with the final rules on how you could, exactly how much you could apply for as a self-employed and independent contractor. So probably of our total 5,000 applications we've been processing, I'd say 90% are not self-employed or independent contractors. So the vast majority of them are the small businesses.
Shane, what did you see from Squire? You guys work with business and individuals alike. Any sense for the success rate of self-employed independent contractors and getting through the PPP?
Well, our experience is similar to what Brent outlined, in that the majority of the people are small business clients. Very few independent contractors, self-employed individuals were able to get their applications in during that period of time. I was actually surprised at the lack of the number of independent contractors and sole proprietors, self-employed, that approached us to help them to get through. I don't know if they were just discouraged because they saw the funding was going to run out, or they were discouraged because the regulations came in so quick. But I don't know of a single client of ours that's an independent contractor, self-employed, that was able to get funding.
That's a shame. There's a lot of discussion around putting additional funds into this program. Again, I feel like I'm cable political news at this point, but from the panel, we talked beforehand, how many of you guys, we all generally agreed that we think money's going to get put back into this program. Anybody want to comment on that?
Yeah, I'll go ahead and say, there was a lot of speculation about how long the $349 billion would last. And it turns out it was 13 days. And then those funds were gone. And that was literally getting the program up and going from the start. I've described it to people as literally building an airplane as it was taking off. And the airplane is in the air. You've got a windshield, you've got some engines, you don't have seats, you may not have windows. And that's literally what the PPP program is. And that's why it's been so inefficient. And as you go through and then the government changes the rules, banks are inherently very, very cautious and very skeptical of the government, because we've been burned many times. So that's what has slowed down this entire process. To the extent that they refund, which I think is a high probability, would be my view, I think that the funds will flow much more quickly, but they will also deplete much more quickly. So even if they come up with another 250 billion, my advice to those that have not yet had a successful application would be prepared, because it will go quickly.
And I would agree with you, Brent. I mean, I've been kind of watching the political chatter. The Stephen Mnuchin, the Treasury Secretary, asked for additional funding last week. It's turned into a bit of a political battle, but there's clearly a huge appetite, a huge need for this money. I will be absolutely shocked if additional money hasn't been passed. They asked for 250. I can't remember which association, I think a banking association even went further and said, we need 500 billion into this program. So I don't think it's a matter of will it happen, but it's a matter of when and how much. Interesting statistic from Marco Rubio, Senator Marco Rubio from Florida, was one of the key authors of this particular program. And so he's been kind of like the go-to person on Twitter. He put this tweet out. I don't know. I mean, it looks like it came from the SBA from a couple of days ago, what the distribution of the loans were. Now, I would argue that you really should have another tier or two lower, because for your self-employed and independent contractors, those are going to be much smaller loan sizes. But this was an interesting distribution that he put out there from the SBA as of a few days ago, of how the money was being distributed. We all have agreed that we don't think the independent contractors and self-employed had a good chance to get through. let's talk about next steps, because I don't want to talk about despair. I want to talk about hope. What do we need to do to prepare? So Brent, I'm probably going to hit you up a lot on some of these early questions.
Sure.
I've applied. I didn't hear back from my bank. Again, let me go through those stages again. Like, how do I know when I got a loan?
You will know because your bank will contact you and let you know what's known as an E-Tran number. So that means your application has been processed by the bank. The bank has approved your application. The bank submitted that to the SBA on this E-Tran system and received confirmation back. So the 349 billion that is being spoken of, that money has not been distributed. A small fraction has been distributed, but it has essentially been reserved. When you have your E-Tran number, your funds are reserved so you can sleep well at night. So if you have your E-Tran number, you're in good shape. Unfortunately, if you don't have an E-Tran number, contact your bank. Make sure that you don't have one, but you're probably out of luck until the funding comes back.
And I was shocked at the poll results. Some things that I've seen have said as low as 5% have been funded. I expect that number to go rapidly. So if you got your E-Tran number, if you've you don't even have to sign loan docs. But if you have your E-Tran number, this additional steps of signing the loan documents and the funding will follow. You're going to be okay. Is that what you're saying?
That's exactly right. And banks are doing, in my mind, exactly the right thing. We've been so preoccupied in getting people to the finish line of the E-Tran number. We haven't been really focused on getting to the loan documentation and funding stage. So that's where the majority of the time has been spent. And again, one of the reasons I'm surprised, I'm happy for this group that has so much that's funded already. And that's probably a good entree into the next segment that you may want to go to in terms of forgiveness, because as soon as you are funded, that kickstarts the eight-week period that's so critical in the forgiveness calculations.
Yeah, let's definitely talk about forgiveness. I want to hit a couple points before we get to the forgiveness discussion. Let's say I'm one of the ones who have applied. I haven't heard anything. What should it's going to be different with different banks, but what should a person do in preparation for the next round of funding going through the PPP?
Sure. So if you've applied and you haven't heard anything, contact the banks that you've applied for. And what you want to do is get confirmation from the banks that they have reviewed your application and they have approved your application. So in essence, you're on the doorstep of trying to get into the E-Tran system. That's where you want to be. If they are just waiting to review your application, it still could be delayed. They may ask for additional documentation. You want to do all of the underwriting, if possible, now through the bank while we're in this kind of waiting game for more funds to come.
Shane, you and I have been kind of on the front lines with our companies supporting businesses, trying to get these loans. Share some of your experience, successes or challenges that you've seen across various companies in this process.
Well, I think once our clients got past the point of understanding what the legislation was asking, I believe the biggest frustration was just communication with the banks, or the lack thereof. And I'm not criticizing the banks. They just happened to be, the only touch point that these individuals had. So just the pure uncertainty of throwing an application like into the well, not hearing back, and then you're reading that the money's going to be gone. It just created an unbelievable amount of stress and anxiety, I think, in a lot of people, and frustration. I would not want to be a banker right now. It's almost like kicking the dog, Yeah.
Scott, let's bring you in now. You're bringing a legal perspective. You've been working with companies, especially with the affiliate rule that applies to many venture-backed companies. If somebody has not applied, or if they're still struggling to apply, what legal hurdles did you run into during this process?
So for a lot of our clients who had venture investors, it took them a while, and part of it was the kind of dribble out of regulations to figure out how many employees they had, because most of them had some sort of affiliate issue. And so we had to determine, did they have one? And if they had one, could we get rid of it? Because the government said you could amend those away. And so if you're a company that had investors and you haven't done your affiliate analysis, you need to get that done quickly. And if you've done it and you had stuff to fix, you have now maybe a few days you didn't think you had before to get them fixed. People saw the money disappearing and just kind of threw up their hands. And so I would encourage people, if you do have investors, to do that. Luckily, for a lot of small businesses that don't have outside investors, they don't have to deal with those issues. They turned out to be pretty problematic for a lot of people. Because they weren't easy to figure out, and they weren't easy to get rid of, and to get rid of quickly, especially when you had if you had to do state filings with offices that were closed or requiring extra time to get things done. So I would say if you're a venture-backed business, take advantage of this couple of days of delay, and figure out if you can qualify, and then get in the queue somewhere. And if you're not in a queue, be ready. And I think that if you look at some of the other numbers I've seen about the lenders that succeeded, you might think about going with community-based lenders, closer to home. Even if you didn't have a pre-existing relationship, spend that time now to get that relationship set up, get the KYC done with them. They seem to be a little more agile at getting through the process.
Gotcha. Expert opinion, and I'll hit the four of us. What's our best guess when we think that Congress will agree? I mean, I know we're kind of putting the crystal ball out there, but if you were to make a guess, when do you think Congress will reauthorize additional funds for this? Let's start with you, Shane. What's your best guess?
I'm going to go with Tuesday for 400.
Okay, Brent?
I would be shocked if we get to Monday morning and it's not approved.
Okay, Scott, what's your opinion?
Shan already took it. I think it's going to be Tuesday, and I think it's going to be north of the 250 that we're talking about. The other issue is that the EIDL program's out of money, and so I think the Democrats are going to dig in, and they're going to want money on that. That's what's going to slow it down.
Gotcha. And my vote was going to be Monday. So I think the general consensus is you may have a few days. Don't lose hope. There's going to be options, but you're going to have to be prepared. So if you didn't get a response from your bank, look at some alternatives. My experience, I get a shout out to a local bank that we worked with, Continental Bank, who does like machine leasing and lending. They were phenomenal. Little bank out of Salt Lake. We struggled with the big banks. I think the big banks had a heavy burden trying to process a lot of loans. I also think there was a little bit of shenanigans going on, but we're not going to go negative here. And so you gotta look at your options. And I think this is a good transition point to bring in Gila, who is with 33 Sticks. I was talking to Jeremy beforehand, like for any of you that have raised funding, venture funding, you're not going to get money on your first round. So Gila, why don't you tell us about your experience and kind of illustrate the hustle you got to do to get to it?
Yeah, thanks for having me. I'm glad to share. Yeah, that I would say that Friday morning when it was going to become available, I got prepared the night before and I got everything ready. I stayed up late to just get everything together. And for me, came Friday morning, April 3rd, I just kind of submitted my information to any bank that kind of would open for us, that had an application or some sort of queue that we can get in. I emailed our bank. So it was kind of, trying to get in wherever we could. And eventually we did get a response from a bank that we didn't have a prior relationship with. So it was kind of turned out to be a really good approach to just try to connect with whoever was ready. I had all my browser tabs open and I was refreshing on all the banks, they had all the PPP page ready, but kind of saying, oh, we'll let you know. And so I think that was kind of the experience that kind of worked for me. for
So
sure.
you looked at a lot of options. Did you apply at all those options, or did you say this one's responding, I'm going to go through the process with this one?
I went with whatever they would take. So some banks had a queue where you would just submit like your initial information, the size of your company, almost like an eligibility kind of thing, and it would send it to them, and then you would have to wait until somebody contacts you to actually submit everything. Some throughout the day opened up with an actual place to attach things and to send them the documentation to a certain email address or something like that. So whatever they would take, I would send. For the bank that we do bank with, they weren't ready. It was Union Bank. And some of our personal banks that we bank with, like Zion and Wells Fargo, they weren't ready either. But like I said, I just kept trying and emailing the individuals that we knew there, just in case they can pass it along easily. So everything was kind of ready and packaged.
So from the time that once you got your bank of choice, and which bank was that you ended up getting funded with?
Celtic Bank. Yeah.
So from the beginning of application, and you were one that said you had been funded. What was from beginning to end? How long did it take from application start to getting funded?
It took about 4 days.
Wow.
Yeah, I was completely, like, to be honest, I was completely shocked that it went this way. Probably not representative of how it went down for most people, but it was pretty short, and there were a couple of days in between where I wasn't hearing much, but I was hopeful that they're working on it. It was the weekend, so I wasn't gonna bug them too much, but it kind of surfaced, and once they asked me for a voided check, I kind of knew that we were close. So that's when it happened.
I want to kind of expand that question to some of the panel. Shane, you and I worked across a lot of companies. What have you been seeing and hearing in terms of the time between application start to fund? Any sense of what you're seeing amongst your clients?
Well, funding is I like the others. I'm surprised at the number of people that have been funded. It's certainly not representative, I think, of what I'm seeing generally in the marketplace. There is a lot of people that have received notice that they have the E-Tran number and the loan number has been assigned and they will get funding. What we're hearing from the lenders is we were so focused on this last rush to get everybody into the queue that we had to turn away from the document process. And so now they're going to take the next couple of days and hopefully over the weekend, get the actual loan documents to those people that did receive the approval. And then hopefully shortly thereafter, they can get the funding early next week.
Gotcha. Okay, so let's just talk about funding, and then I want to move on to forgiveness. Part of the reason funding wasn't happening, or actually, I'd like to ask Brent. You're in the weeds on this. Tell us why it isn't easy to turn around and fund these things quickly.
Well, a couple of things. There was a lot of uncertainty what the note needs to look like. This is a program unlike any other program most banks have ever done. Think about it this way: you're lending money to businesses that are in distress. You're lending money without any collateral. You're lending money without any personal guarantees. So it's something that we've never done before. And the SBA is very peculiar in terms of what they want. They want very specific items in the loan terms. And they were promising for several days that they would come out with what the actual loan document should look like. And then ultimately, just earlier this week, they said, use the Form 7A loan document as a template, and then each bank can customize it. So it's been several false starts, but I agree with the previous panelists. Most banks have been so focused on trying to get as many people E-Tran numbers as possible. We figure funding can come later. But I also want to assure you that we are keenly aware that this funding is so necessary for small businesses, because the whole point of the program, and that's what I want to get across to this group, the whole point of this program is to fund small businesses for 2 months of payroll and operating expenses. That's what it's all about. There's all kinds of rules, all kinds of minutia, but Congress wants small businesses to be able to keep their employees so their employees can get paychecks so they can continue to live their lives so we can get through this national emergency. That's the big picture. And we as banks understand it's one thing to have the number, but most importantly, you need the cash. So there is an urgency, and I think you'll see the spigot start to turn open early next week in terms of those funding amounts.
Gotcha. All right, so let's move on to forgiveness, because that's where we want to, we have a lot of people that have been funded. There's a lot of questions around forgiveness. Let me just put something up real quick, and then I want to dive into it. So just a quick summary on forgiveness. As Brent mentioned, and Brent, just clarify, when does that clock start ticking? Is it when I sign my loan docs? Is it when I receive money in my bank account? When does the 8-week period actually begin?
It begins the day you receive the cash.
Okay, so that the clock starts ticking. There are some provisions. Again, this is the Paycheck Protection Program. There were some provisions around restoring hiring levels if you had to do layoffs. There were some provisions around maintaining salary levels. I believe it was, and somebody correct me if I state this wrong, I believe it was no less than 75% of what they were before February 15th. That's kind of the magic number, February 15th. The spending agreements around rent, mortgage, utilities were based on anything that was established before February 15th. The Treasury also gave this guidance that was, and this was a really interesting statement. They anticipate that when it comes time for forgiveness, that not more than 25% of the amount may be for those non-payroll costs. So there's a lot of questions. We saw a lot of questions around the application process. We saw a lot of answers coming from Treasury around clarifications. We haven't seen a lot yet on forgiveness because I think everybody was focused on that application. Now we're going to be looking at forgiveness. Let's talk a little bit about what businesses should be doing. Here's a really kind of a dumb question, but not really when you think about it. What is considered payroll costs? Shane, why don't you give us from what you've seen and read, what can be considered payroll costs?
Well, I'll probably overly simplify the answer, but the gross payroll that you pay to your employees plus benefits that for which they do not directly receive the cash.
Gotcha. One of the questions I have, and maybe this is a legal question, I haven't seen answers, but I've had some of our customers say, can I pay bonuses during this time period and will it be forgiven? Maybe, Scott, what's your legal opinion based on what you've seen around forgiveness? Could somebody say, hey, I want to pay all my annual bonuses now in this time period?
Well, I mean, I think that would be a little bit aggressive. It's supposed to be money that spent for costs that happened during the period. So we've had some people ask if they could pay some of the payroll costs that they had deferred and pay them now, and I think that wouldn't be allowed. It's supposed to be costs for you're incurring now. So I think if you are paying bonuses that were earned last year, for example, that might be aggressive. I think if you wanted to prorate a portion of the bonus that would be applicable to this time period, or set up a bonus program that happened during this period and incentives that happened during the time period that's getting measured, I think that would be fine. So it's really the whole idea, when you look at all the allowable costs, both for the uses of the loan and for the forgiveness amounts, they talk about this 8-week period as kind of being key as to when you incurred the costs.
Gotcha. Okay, here's a really great technical question on this point.
Hey, Stephen.
Yeah, go ahead, Shane.
I think Scott mentioned something that's important, and that is during this 8-week period, there's two words that are being kind of bantered around, and that is incurred and paid. So, if the expense has to be both incurred and paid, that limits some of this forward pay, right? Or excessive bonus pay that was due to performances performed in a prior period. So well, it'll be interesting where the final regs come out, but I think people looking for forgiveness need to keep a close eye on not only what was incurred, but also making sure that those amounts that were incurred get paid before June 30th.
Yeah. Well, and not just for June 30th, but within that 8-week window, right?
Yeah, but no later than June 30th.
Yeah.
Within the 8-week window, no later than it.
No, now I'm not certain of that. Maybe the attorneys can chime in, because you can apply for a PPP all the way to June 30th. And then after, if there were funds theoretically, and then it's 8 weeks after you receive the funds, is my understanding.
So here, oh, go ahead, Scott.
No, that's correct. And it just confirming what Shane said, we don't have the regs yet, but they say very clearly, they're talking about the amount that you expend during that time. So it's something that they're really kind of hyper focused on.
So I have a really good question around the 75%, and that seems to be guidance. But the way it was phrased, but I think it's going to be more or less treated as law until we get the final forgiveness parameters. But somebody said, what's going to happen if I spend, less than 75% on payroll? Do I lose all forgiveness? Is it going to be prorated? How do we envision? I mean, and we also have, there's a lot of unknowns. So if we don't have clarity, just please clarify on what we think it's going to be versus what we know it's going to be.
Sure. So do you want me to jump in on that one?
Yeah, why don't you jump in, Brent?
Okay, so first, I would set very clear expectations with your full management team. A lot of people think about this PPP money and think about it's just a grant. And I think you need to set the expectations that this is a loan with the potential to have forgiveness. But it's very important that you follow the exact rules. And it's hard to know the exact rules because, as others have said, those are being written today. But there's 2 points of 75%. That's the 75% must be used for payroll costs, no more than 25% for non-payroll costs, which are mortgage interest, rent, and utilities. Then there's another 75% that you must maintain an employee's pay over the 8 weeks, not less than 75% of what they had before. So there's 2 different 75% pieces in the rule that can get confused. But to answer the question specifically, yes, if you use less than 75% for payroll, then the lender will have to pro rata the amount of the forgiveness that you would get.
Gotcha. Gila, you got through this process successfully. How are you approaching forgiveness? Being an example of somebody who's watching, take us through your methodology for preparing for forgiveness with the 33 sticks.
Yeah, definitely. For us, we're a small business, and even though we're based out of Utah, we have employees kind of working remotely across the country, and each one of them is working with just a handful of very large projects. So any change to our client base, the contracts being either pulled or reduced, is really going to have an immediate impact for our business for sure. And we did experience some of those, even a few weeks back when stuff kind of sort of hit the fan a few weeks ago. And so I think for us, this loan is going to help us stabilize during this period. And in the next 2 months, it's going to do 2 things. It's going to allow us to, most importantly, make sure that our employees are not impacted, which is what this loan is meant to do. But secondly, it will allow us as kind of business owners to make more balanced decisions and figure out what everything is going to look like in a few months. So kind of gave us that cushion that we need to, for the next few weeks, to not worry about, okay, what do we need to reduce? What do we need to do? So it's definitely going to be applied in the way it was supposed to, to make sure that none of our employees are impacted.
Awesome. And that, I think we all agree, we need to emphasize Paycheck Protection Program. Keep your people employed. There are some clarifying questions that I've had around, and maybe this is where we need another legal opinion. Rent. I have an office. I have a warehouse. Does rent on both of those, are both of those applicable? I haven't seen anything in the guidance from Treasury. What are some of the opinions out there? Maybe start with our legal opinion, Scott. If I have multiple forms of rent, can I, what's your understanding?
Yeah, I don't see any limitation on that. They wanted to make sure that I think that they're being expansive on rent. They said rent, including, something under a lease. They wanted to make sure that people didn't too narrowly interpret that if you had a lease, then maybe you don't have rent. And so I would say that, if it's a location that your business, pays for a physical space, then the cost of that physical space during the covered period can be a use of the loan funds.
So a little clarification, this is a question from the audience. Around the mortgage interest, well, we're on this topic of rent and places that you're working. Let me read this one because it's very specific. I've read several places that the PPP proceeds can be spent on mortgage interest and other interest obligations, and other places just mortgage interest. Can I be forgiven for PPP proceeds spent on interest or business term loans, or is it just mortgage interest?
So the forgiveness is limited to mortgage interest, but the permissible uses is interest on, it's obviously the mortgage interest, but also any other debt obligations that your business had, as long as they were incurred before the covered period. So as long as they were in place before February 15th.
Gotcha. Another question on the applicable uses. And Shane, I'm going to bring you in on this because this is like, what is a utility?
I'm going to read it, which I believe comes right out of the Act. I think it's a rather narrow definition. It's electricity, gas, water, transportation, telephone, or internet service, or which service began before February 15th, 2020.
Fantastic. That's awesome. So just say that, could you just read those categories one more time, just for the audience, because there was a lot there.
Sure. Do you want me to use my dramatized voice or just normal? Electricity, gas, water, transportation, telephone, or internet service, or which services began before February 15th, 2020.
Awesome. There you go. That's great. So Brent, let's come back to you. The banks, the lenders are going to be assessing the forgiveness. It's not going to be the SBA. It's not going to be the Treasury. Tell me about, I realize that, you guys have been just busting it trying to get these loans out. You probably haven't had a lot of time to think about the forgiveness process, but what are you guys looking at? Let's fast forward 8 weeks. What do you expect? What would you tell people to be prepared to do when it's time to go through the forgiveness process?
My advice would be try to make it as easy as possible to lead your bank to the conclusion of what you've spent the money on. I've heard several people say, is it a good idea to take this money and put it in a separate bank account so I can prove exactly what I spent it on? To me, you don't have to do that. That's kind of above and beyond, and it makes sense to me. Why would you not? But just be very careful to track the expenditures you make with this money so you can prove it. Ultimately, that's what we're trying to get to as banks. We have a fiduciary obligation to make sure that you're not fraudulently using this money and then forgiven. That's where we can get in trouble. So to the extent you can have your records in such a form that it's easy for us to prove exactly what you spent this on, and it is the allowable expenses, that will give you the highest chance of having the most of the loan forgiven. And one of the other things I don't think we've mentioned on the loan, the terms are interesting. The first 6 months of principal and interest are deferred. So it gives you 6 months to really figure out how much can be forgiven and be forgiven. And I think the law actually says after the 8-week period, the applicant or the borrower will come to the bank and say, this is how much I think should be forgiven. Then the bank has 6 weeks to make a determination of that forgiveness. So it will all happen very quickly after that 8-week period.
So I want to ask a couple follow-up questions, some of which are coming from the audience. So the burden of getting forgiven, that's going to be upon the borrower, is what I'm hearing.
They'll need to prove to the bank what they spent it on and make. So you made an application for the loan, you've been granted the loan, then you'll have to essentially make an application to be forgiven.
Gotcha. So there'll be a separate application process that you'll have to go through.
Well, technically an application, essentially it is, but I'm not sure technically what it will be called.
Yes. Yeah, gotcha. And you mentioned some dates in there. So there's the 8 weeks. What again? Reiterate. How much time do I have to apply for forgiveness after that 8-week period is done?
I don't know that it's explicit how long after that. I do know once you do apply for forgiveness, we have 6 weeks to decide. I would recommend that within a couple of weeks after that 8-week period, you're in communication with your bank. I know what we plan on doing is putting out a sample set of forms saying this is exactly what we'll be looking for. And if companies can provide exactly that, it makes our job easier, and just set the expectations. And that was one of the problems going into PPP, is there were very few expectations in terms of what did the application need to look like. And with a little bit more lead time, I think all of the banks will be better prepared to tell you exactly what we need to document the loan forgiveness.
Gotcha. So Shane, let me kind of, I'm going to go around the table and just kind of get different perspectives. You and I, the world we look at is very precise. How would you account for this so that you could keep people like Brent happy? When your customers go to Brent, what are you going to do to make sure that the forgiveness application is airtight?
Well, I don't know if I can keep Brent happy. It would be very expensive to keep Brent happy generally. I think Brent made I've heard in the past from a number of people, and Brent's commented on it, that perhaps it makes sense to be hyper careful and put this money into a separate account. I suspect most of my clients are not going to do that. But I think what they can do is in their accounting systems, it's, in most any accounting system today, it's very easy to flag transactions for particular projects and purposes. So even if it goes to, let's say, utilities account, most of my clients will probably be tagging it under a project code that is specific to the COVID-19 monies that they receive.
Gotcha. Yeah. So, I mean, it's kind of accounting 101. Keep your receipts, keep your invoices, clean records, especially your payroll systems. Like, don't be this. If there's ever a time to be precise with your accounting and your financial operations, it's going to be during this period. Scott, legal perspective, forgiveness. What are some of the things that you would recommend people look at?
Well, just one quick thing, and it's probably for a pretty small subset, but for those people who are really struggling and were able to successfully get one of these loans, if you have existing loans with other lenders and you're subject to bank account control agreements and that sort of thing, you need to make sure that you've got this money in an account and that you're using it the way you're supposed to, because if you were to become insolvent and your bank were to seize the funds in this account, obviously these funds going to your secured lender are not going to be an approved use, and you're going to not only lose the ability to use them, you're going to not be able to get forgiveness for those. So just another reason that for those people who are really on the edge, that they're going to want to keep these things separate. I would say from the legal perspective, some people there are in various places on the application and in the regulations a bunch of different penalties. They'll list 3 different criminal code sections. Some of them talk about lengths of prison terms and fines that are involved, and they get more if you applied through an FDIC lender. And so that's you look at the list of allowed uses for the money and just make sure that you're limiting yourself to those because of the fact that it is the Paycheck protection program, and hopefully people are using this to keep people on. I don't think we're going to end up having a whole lot of people that are going to have other uses for the money, and worrying about whether they have enough rent and utilities to that are clearly rent and utilities to fall into those buckets to use the 25%. And if you find yourself in a situation where you just can't keep your employees on, and therefore you're going to give up some portion of the forgiveness, remember that this is going to convert into a 2-year loan with a super low interest rate. and you're not going to have to start paying on it immediately. And so just be prepared to have that obligation going forward. It's not the end of the world if you don't get 100% forgiveness. People like to think of this as free money, but even if it ends up not being completely free for you, it was still hopefully a cash infusion at the time you needed it, with very favorable terms, to the extent there's some portion left over at the end.
That's a really great point, Scott. I think it's easy to get obsessed with the free part of it, but there's nothing against just using, this is a very low interest, short term or medium term, depending on how you look at it, loan. Here's a really interesting scenario that I need some of you guys' intelligence on. So this is from the audience. Assuming they received the PPP loan this month, can we use it the next 8 weeks to pay rent and payroll, and then furlough our employees before the end of June? Or do we have to keep them employed through the end of June, even if that is outside the 8-week period after receiving the loan? So let me simplify this. I think the question is, all right, I keep my people, the world's still a mess, and I got to lay them off after the 8-week period. Am I going to be okay from a forgiveness perspective?
Yeah, I'm happy to jump in on that if you would like.
Yeah.
From my perspective, you can read the technical rules, and we all should, but what is the intent here? The intent is we keep people in jobs. And if you keep your employees over the 8-week period, that's what the intent is. We all hope we're through this. So after 8 weeks, the economy is picked back up, demand is picked back up, and you wouldn't be in a position to have to furlough after that. But I don't think there's anything technically that would prevent you from doing that. Let's just hope we don't get to that, is my perspective.
Yeah.
Yeah, I'd be shocked if when the regulation, or the interpretations come out, if they essentially, that would be going against what the law says. The law says keep them on during that 8-week period. Now, that much being said, we're collecting, sample notes, and at least one of our clients this week received a note from B of A, which required them to covenant that they would keep at least 90% of their workforce through the end of the year.
Wow.
Now, I don't know what violating that covenant would mean. It should not mean that they're giving up any forgiveness. I have no idea why Bank of America with this particular lender this particular borrower would do anything like that. But hopefully, that's an outlier for some reason, and it should not be affecting forgiveness for that client.
Okay. Here's another question. On the application, you had to put the key things you had to put was your monthly average payroll, which was proved to be a little bit more complicated than it looked on the surface, and then a head count. One of the provisions around forgiveness is the maintaining a head count or restoring a head count to your February 15 levels. How is that going to be measured? And how is that baselined? So maybe I'll start with you, Brent. I haven't seen a lot of clarity in the regulations here, but just give the audience here some guidance on, what should they be measuring against, and what are you going to be measuring against, or are you going to have to get further clarity to do that?
Yeah, there's a lot of questions that need to be answered about that. That is one of the ones that we've been reaching out to the SBA for more clarity. But essentially, it is back to, they want you to keep the number of employees that you had on February 15th. And to the extent your number of employees goes down, we're going to need to adjust the amount of loan forgiveness proportionately. So that's the gist of it. The formula is going to be pretty complicated because it has to look at all kinds of different possibilities and variabilities. And I'm sure there'll be more specific rules that will come out of that. But basically, they want you to keep your workforce intact, not just payroll dollars, but number of employees. And I think one of the things that we may not have mentioned in terms of the payroll dollars, it's limited to employees or the first $100,000. So it's not like you can limit the number of employees and bring on a bunch of high paid employees over $100,000. So you have those two parameters in there you need to be careful of.
So Hila just brought up a good point. She said her loan docs actually spelled this out. Would you mind showing us the what you're talking about, or at least describing what it says around headcount?
Yeah, let me see if I can pull it real quick. But let me just read it real quick. So first of all, it says that did I unmute myself? Yes. First of all, it says you can pick an 8-week period anytime between February 15th and June 30th. That means that it could be in the past as well. And then where the area where it kind of highlights how much of the loan will be forgiven, it says that if you keep all of your employees, the entirety of the loan will be forgiven. If you still lay off employees, the forgiveness will be reduced by the % decrease in the number of employees. So, you know, if you had whatever the reduction is, the forgiveness would be reduced by the same %. And then it says if your total payroll expenses on workers making less than 100,000 annually decreases by more than 25%, loan forgiveness will be reduced by the same amount. And lastly, if you have already laid off some employees, you can still be forgiven for the full amount of the payroll cost if you rehire your employees before June 30th. So again, within that time frame between February 15th and June 30th, if you spend that money on your employees fully, you know, so it's completely forgiven.
Now this is really fascinating, Hila, and I want to come back to you, Brent.
Try to pull
I
it.
didn't see this level of specificity in the guidance from Treasury. Is it just me, or are in this case is the lender applying some interpretation to the guidelines?
No, I actually think there is a frequently asked questions out by the Treasury around this now.
Okay.
But I think this is a very important topic to understand. In the notes we're writing, the note is subject to change. You're signing a promissory note that's subject to change based on the implementation rules of the PPP that will evolve.
Oh, wow.
Right?
Yeah.
So we're all subject to the whims of what the SBA. So know that what we're saying today is what we know of today, but it's unlike anything I've ever done before, that you're signing a note and you don't know exactly what the terms are, because they very well could change as Treasury issues these final rules and regulations.
Wow. Yeah, that is fascinating. And this whole thing has been kind of fascinating. I liked your analogy. We're building I think for the tech world, they very much appreciate building planes while they're taking off. The calculation, I think we touched on this last week. I want to reiterate this. Is this just a bodies calculation? Is it a full-time equivalence calculation? How am I calculating the number of employees here? Shane, it looks like you've got an answer. What from your perspective, what are you advising clients? How do you measure the employee count?
Well, for purposes of forgiveness, we're telling our clients to use full-time equivalents. Now, in the last deep dive that we had, I mentioned that there's some difference of opinion as to what the definition of full-time equivalent is. I mentioned that we're using 40 hours a week as a basis, but I think the majority of people are using 30 hours a week as a basis. So if you have 2 employees that work 15 hours a week, that would equate to 1 full-time equivalent, right? Versus the other definition where 2 employees would have to work 20 hours a week to be a full-time equivalent.
Awesome. Scott, what's from a legal perspective, how are you looking at or advising around full-time equivalents?
So right now, and we did a very deep dive, and as was mentioned, it's not defined in the Paycheck Protection Program. A different part of the CARES Act did make reference to it, and they made reference to it by making yet another reference to the Internal Revenue Code, and that's where the 30 hours the 30-hour FTE came from. And so again, that's not binding in any way because it wasn't in the PPP. But we think that's where it's going to end up. It's definitely an FTE standards. It's not just a head count. Okay. And so we think it's entirely likely it's going to come up with that. The government uses that 30-hour for a lot of its different programs, especially for determining size of businesses and when they're subject to a bunch of different government rules. If you have this many FTE employees, then you're subject to this level of regulation. So we'd be surprised if they required a 40-hour when for regulation purposes a lot of times it's set at 30 hours. But we haven't seen anything yet. We're sure that we're going to get a new batch of money. We're going to run out of that money, and then they're going to start writing forgiveness rules.
Gotcha. Yeah. And then the 30-hour rule, that's what's used for the ACA, also known as Obamacare, right? So it's not unprecedented, and it's probably logical that they will use previous precedents in these things. One of the things I've heard is, so what if I miscalculated on my form? And is it going to matter? Will I just go back and have to create parallel calculations? So let's say I put on my application form a full headcount number, and then it comes back and they said, well, actually you have to calculate it this way. Do I essentially just go back and say, okay, this was my February 15th calculation using the new guidelines, and here it is during my forgiveness period, and I'm good? Brent, looks like you have an answer there.
Yeah, I think people make mistakes, and as long as you can prove that it was a mistake and it's supportable, I think we can change what your answer was on your form. We just want to deal with the truth, what is, and give us supporting information, and we'll change that. The only thing that cannot be changed is as long as the funds are maxed out, you can't go in and say, I calculated my payroll number wrong, I need more of a loan amount. But besides that, I think anything is subject to change, and if it was a good faith error that was made.
Okay, lots of questions on this head count. I'm gonna hit a couple quick ones around the hiring levels. So one that came up earlier was, do I have to rehire the same people, or does it just have to be the same count of people? I haven't seen anything that says who you have to hire. I've just seen numbers. Does anybody have any differing or clarifying opinion on does it have to be the same people I let go, or can it just be anybody to fulfill that number?
For what we've seen, it's just talking about the FTE. So it's not going to be the actual person. It's going to be, did you restore the level of employment generally?
Okay, good. Shane, looks like, did you have anything to add to that?
Well, actually, as a follow-up to Scott, I suspect, Scott, there is some uncertainty, though, not on the headcount issue, which I agree with you on, but what about the wages of that replacement individual? Will the wages of that replacement individual be allowed in the calculation from your perspective?
Okay.
Sorry, I didn't mean to be the moderator to ask.
No, I was like, okay, are you asking me the question then?
No, I was asking Scott.
Oh, Scott, okay.
Yeah, because he was, just to follow up on what he was saying.
Stump the chump here, right? So say that one more time, Scott. Question from Shane.
Oh, what I believe the rules aren't clear on is, well, first of all, I think it's clear that if someone leaves and you replace that head count, you're fine on the head count calculation. But as we know, you also have to maintain wages at a certain level. So I think there's some uncertainty in what I've read, that if the wages of that person that you hire as a replacement headcount can be included in the wage calculation.
And I agree that's one where we can't figure that out yet, because how have you restored that person's wages that you cut if that person's no longer there? So we agree that we can't figure that one out. We think when you're talking about FTEs that there might be some interchangeability as to who you're talking about or the number of people you're talking about, but with the wages, that doesn't make sense to us, that you could just suddenly hire someone else that was a higher cost to replace the 5 lower wage people you let off.
Well, one of the things that I've seen is it looks like in terms of the payroll calculation, some of the same rules are going to apply, that there will be a cap on high earners. The question I've had is, and it looks like it's going to be the same thing. So when we did the payroll calculation for average monthly payroll, you had to cap people payroll costs above 100K. It sounds like they want to do the same thing, but how is that going to be calculated, right? Is that just going to be averaged cost, right? What's your take, Shane?
I've kind of gone full circle on this. I think I'm to the point where I'm recommending to my clients that you just take out the individuals that are over 100,000. Just take them out of the calculation entirely, which obviously changes your base. And that gives you more flexibility to pay those people that are making less than 100,000 more money, which I think, coincides with the purposes of the act itself. So again, I'm recommending, let's just take the people over 100,000 out of the calculation.
A question from the audience around restoring hiring levels. Do I have to put them back in immediately, or could I employ them the very last week of the 8 weeks and still get credit for full payroll levels? Brent, it looks like you've got a thought there.
Yeah, it's a combination of both the FTE count and the payroll. So if you furloughed all your employees and then just brought them back the last week of the 8 weeks, you're not going to have the payroll. So how the interplay of those two works is yet to be determined, as far as I know. But so if you did that just to try to play the system, I think you'd be in trouble in terms of not having enough payroll cost. So I when in doubt, go to what the intent is. The intent is to keep the people you had on your payroll right before this.
Yeah, so that's a very good point. So let's say, and again, we're in a gray area here. So let me just clarify my next comment. I'm going to restate what Brent said. You may be able to restore your full headcount number at the end, but the payroll cost that you'll be producing for forgiveness won't be that significant. So in the end, it's kind of a wash. So. Gila, any thoughts from what you've seen from your bank? You were saying you might have some insights on the hiring counts. What are your thoughts on this particular topic about headcount levels?
Yeah, so again, off of the language that I've seen, there's two levers of things that could change. So if you let people go that were there before February 15th, and at the end of the period, they're not there, it says that the forgiveness amount will be reduced by the % decrease in the number of employees. So that's one thing. And then the second lever of something that could change is if your total payroll expenses for workers making more than 100K annually decreases by more than 25%, then the loan forgiveness will be reduced by that same amount. So I think that it's kind of saying two things need to be maintained. The number of FTEs, so to speak, not the same people, but the number of employees. And it seems like the total payroll expenses that you spent during that time should not be reduced by more than 25%.
Gotcha. I want to give, so people have power, and I'd love to hear from my experts if you're going anywhere else, but the place that I'm going almost every day is this website on Treasury, right? And most of the information I'm pulling is from the interim final rule, right? That's where a lot of the guidance, and they've had different additional guidance, and then the FAQ. Is there any other places that you guys are going for information on that's authoritative around these regulations? Brent.
Yeah, no, I think you hit the nail on the head. This is where to go. And it's one of the interesting things about this, that the actual interpretation of this is different than the actual CARES Act. They made a couple of very substantial changes in our mind from a bank's perspective. The CARES Act suggests that this be up to a 10-year loan and interest rates up to 4%. And when they implemented it, they made it a 2-year loan and 1%. So right, wrong, or indifferent, how they're implementing it, it comes right here from the Treasury. So this is the fountain of knowledge. And I would be very skeptical relying on articles. The articles I've seen are about 80% right. So be skeptical as you look at others' expert advice and find out for yourself. and know one thing, that it will change. Whatever we believe today will change over the next 8 weeks.
So I'm going to put the URL, John, and those who are moderating, and maybe you can get this out on YouTube and other places. This is a website you want to watch. And the one that I think there are new documents that are being produced. It'll be interesting to see if they have an interim final rule on forgiveness that will be explicitly produced. But the one that I watch like a hawk is the frequently asked questions. It gets updated almost every day, and it gets very specific. So it might be more than you want to consume, but if you want to stay up on what Treasury is saying, this document is updated regularly, and I imagine you're going to get a lot more updates over the next few weeks, and quite possibly a couple more documents as well. So watch this website like a hawk. If you don't have a good accountant or lawyer who's not doing that for you already, this is where the good stuff lives.
And please, 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 if anybody has any pull with the SBA, let's teach them some good web hygiene about putting, they have one document there that shows it was updated on April 2nd, even though a bunch of the others get updated and are new. But I guess that's too much to ask.
That's a really good point. The SBA is technically the one administering this program, but you're not going to find a lot of information from the SBA. You got to go to Treasury.
If you go to the SBA right now, they have the version of the FAQs that's 4 versions old.
Yeah. So this website appears to be the most authoritative. It's a little bit hard to find, but it's been updated like crazy. Awesome. What other questions do we have, John? I think we're getting close to the end of our session here. We got a lot of good questions from the audience. What else do we want to open it up to?
Yeah, I think we've scoured the vast majority of the pre-submitted questions and current questions. We can field a couple more, and if you'd like to put up the other poll, Stephen,
okay,
we can do that, and then we can field a few more questions. And
there's
like.
Yep, let's do that. There's actually one more. There's one more section I just realized I forgot to talk about. The non-forgivable balance. I know there's some confusion here because the language in the application, some of it was kind of scary. There are, threats of criminal penalty. So I want to start with you, Scott. Like, we've spent a lot of time on forgiveness. Let's say I don't consume it all for forgiveness, or maybe my plan is I'm not going to try and get any of it forgiven. What is appropriate use for this money?
So, I mean, unfortunately, it's not really wide open. There's a separate section of the CARES Act from the forgiveness section. It's called Allowable Uses of Covered Loans. And so really, it just expands the time period. So it's the same things: payroll costs, continuation of group health care benefits, salaries, commissions, or similar compensations. And so there, when you see commissions, you can start to think maybe about some bonus programs you might think of. Payments of interest on mortgage obligations, and they're very clear there. You can't prepay anything. Rent, utilities, and interest on existing debt. So it's the same use categories. It's just you're not limited to that 8 weeks following the disbursement.
So, a theoretical question here. I go and I use this money on marketing, or I've heard a lot of companies say, I'm going to try and refinance other debt using this loan. Am I going to jail? Professional opinion, Scott.
If you don't have a matching set of money somewhere else that you're going to use on the forgivable or the allowable uses, you're going to end up on somebody's radar.
Interesting. Okay, so be careful is what I think the bottom line. The safer bet is to use that money, whether it's in the 8 week time period or outside of the 8 week time period, is on those target uses. Awesome. John, we're going to open it up to questions, but before we do that, one of the things that we want to make this series is very useful. So we got a couple topics. We'd love to get some opinions from the audience. So John, why don't you share that poll, and then we'll take some additional questions while we've got that shared. What we're going to show here is some topics that we are exploring for future conversations. I would just love to see what you guys would like to hear from. While we're taking votes on that, John, what other questions are we seeing from the audience that we haven't addressed already?
Yeah, I'll actually, Suze, are you on right now? She's covering quite a few of these on the chat, and she might be able to give some color to a few of these on camera here while this is up.
One additional question that I've seen a lot is around transportation. People are wondering what counts as transportation. Is gas and insurance and car payments included?
That's a good question. Who wants to take that one? Nobody. That's a gray area, clearly. Let's see, who's looked at the code the most? Scott, what you know, we'll go to our attorney, right? Uncertainty around transportation. What is your advice from a legal perspective?
Sorry, I'm coming up blank there. That's the one for left field for me right now. So I'll have to think about that.
We'll go around. Shane, what are your thoughts? Where there's not clarity around maybe what is defined as transportation, what would you advise?
And by the way, I'm like Scott. I have a hard time understanding what that would be, because it has to be in, you know, something that was enforced before February 15th of 2020. So you know, gas would seem to be out of the mix. Repairs may be out of the mix. Probably the common theme here is look at the intent of the act and try to follow it as closely as you can. I do believe, and I hate to keep referencing this, but I do believe when the final regs come out on forgiveness that they'll add a lot of clarity to that category.
I mean, I think when you look at the intent of the act and some of the parameters that have been communicated, it's not like you're going to go out and spin up a new office rent or new utility and be able to get it forgiven. So step one is it's only going to be for stuff that's been existing before February 15th. Point two, if it looks like one of those categories where there's not been good clarity, just make sure you have good records on that area, and then see how the clarification is created around those areas over the next few weeks. Okay, Suze, anything else that's that you're seeing would be good to address?
We're getting questions for people who are self-employed or the sole owner of their LLC with no employees. How do they apply for loan forgiveness? How does the employee count and everything apply for them?
Self-employed and independent contractors. I mean, Brent, what's your take? That one seems pretty easy to me, but I might be oversimplifying it. What's your take on employee count for those situations?
Yeah, that's pretty darn simple. I think you just go to your payroll tax returns that you're going to be filing in terms of what you've paid your payroll taxes on. That's probably the best source we're going to look to, and then make it for the 8-week period, tie it back. But it should be pretty straightforward, and those are generally going to be some pretty small loan amounts, considering the $100,000 limitation for the self-employed.
And one thing that's kind of interesting, we got another interim final rule this week. It's the second one on that page that was put up earlier, and it's oddly named. It says interim final rule, additional eligibility criteria requirements, and that one, section 2 of that, is entirely about the self-employed and the independent contractors and how they should be kind of building up their loan application. So I don't know why that would end up there rather than in the FAQs. I guess on the upside is presumably the final rule should have more authority than the FAQs. So for the people, and I think that was referenced earlier, that didn't come out until Tuesday, even though those people could have started applying last Friday. So it's an odd place for it to be, but it's that interim final rule, additional eligibility, all of item 2. It's got about 3 pages for those people. It provides a lot of answers.
Stephen, a long comment along those lines, if we have a minute, and that is, if you're in a partnership or you're in an LLC that's being taxed as a partnership, you do not, if you're a partner in that, an active partner in that, and receive guaranteed payments, you do not apply separately for a PPP loan. You take your guaranteed payments and income subject to self-employment tax and include that up to $100,000 with the application that the partnership itself submits. And then if you not part of a partner, if you're part of an S corporation, for example, you're not allowed to take any of the distributions, right, to become eligible for the loan. It's only W-2 income. Same with the C corporation. If you're just a 1040 filer, it's the amount on Schedule C, line 31, would be the basis for your number, limited to $100,000.
All right, Suze, anything else that we're seeing that we haven't really been able to address?
One that's a little different than the other ones we've answered is I applied for the EIDL loan. I now am funded for the PPP loan. Do I pay off my EIDL loan with the PPP loan? How do those work together?
This is a really good one. Shane, EIDL and PPP.
Yeah, so yeah, typically you would use your PPP monies to pay off your EIDL loan.
There it is. And there was actually part of that was in the code, was it not? Or I want to say there was some mention of EIDL in the application.
You are allowed to add that to your loan amount that you're applying for.
Gotcha. Okay.
Stephen, here's a pretty technical question. What if I own my office building in a trust and my company pays rent to that trust? Am I going to be in trouble for paying rent to my own trust?
This is a pretty common technique that we see with a lot of businesses. Shane, looks like you have some thoughts there.
Well, along the common theme of it hasn't been cleared, but yeah, I would, majority of the people, not majority, but close to half of the people that have, rent their office or warehouse space, rent it from themselves. So they've been very interested in trying to understand if related party rents are eligible or ineligible, but I've lacked to see any guidance on that topic. Excuse me, I have yet to see any guidance on that topic. I would anticipate, if you take the spirit of the act and the rent is a reasonable, right? You can justify that the rent is reasonable. There would be no reason to exclude related party rents as part of the forgiveness calculation.
But clearly, I think what we're seeing here, and based on the results of the poll, we're going to need to do a follow-up probably in a few weeks, possibly 8 weeks, to get to the bottom of a lot of these questions, because we just don't have all of the answers, but we have some guidance. Hopefully it's been helpful. Any final big questions, John or Suze, before we turn it back to Jeremy?
One that I liked is the forgiven amount taxable?
Ooh, that's a good question. Am I going to have to pay taxes on my forgiveness?
No, you're not required to pay taxes on the revenue you get, right? So the revenue that you get is not taxable. What is still open for some debate is whether or not those expenses you incur will be deductible.
So again, probably a lot of to be determined around how this money will play out after the 8 weeks.
So Stephen, I do have a couple more questions that and we can answer for everyone. But as we do this, I'm actually going to put up the previous poll because people are asking for it and to respond to it.
Okay.
So that poll is now live again, as seen on the screen. And then I'll ask a couple of questions. We have a few people reverting back to the EIDL PPP relationship. On clarification, Shane, are you saying that you use the PPP to pay the EIDL loan, or the reverse?
The EIDL loan will be rolled into your PPP loan.
Okay. Fantastic. Let me clarify one of these questions here. If there's a question about making over 100 grand, could you give some clarity on people that are asking about the $100,000 threshold and where that remark is and where the markation is, just to add a little more clarity. We've had a few more people post about that.
So in the application, monthly average payroll cost, there was a cutoff, whereas you were calculating your monthly average payroll, you had to cut off any pay above 100,000. In the FAQ shortly, it seems like in the last week, they also made some clarifications that would also be applied as a forgivable calculation as well. That is what I've seen. Anybody like to clarify or add to what I just stated there?
And the way you have to calculate that is you have to look back over the last year essentially and see if there's an interim period when annualized if the person would exceed $100,000. So, you know, if they made during the fourth quarter last year $30,000, you've got to annualize that and say that it's 120.
Interesting.
Now, Scott, let me ask you a question. Does that include just base, or is that base and bonus and everything? The 100,000, how does that exactly calculated?
Sorry, you caught me off guard again. I think that it's the cash paid, but it's not the benefit costs.
That's my understanding as well. It would be the cash paid for base salary and bonus, but excludes benefits.
And that was my understanding as well. That was how we're calculating it for our customers.
Yeah, just to be clear, that's the calculation for the amount of loan that you're going to get. Right? That's what we're talking about here. That's not necessarily the calculation that will be applied to forgiveness.
I have one more question that should be a quick one. If you add more employees than you had previous to February 15th, are their costs forgiven?
I guess I would answer that in saying you can only be forgiven up to your loan amount. So if you have more employees than you did, your payroll exceeds what was used to calculate your loan amount, you'll have 100% of your loan amount forgiven, which is the best case scenario.
Yeah, and I haven't seen direct clarity, but I would be shocked. I mean, I don't think the government's going to penalize anybody for employing more people, you know, or not giving forgiveness if hey, I'm hiring more people, I've got more people on payroll. So I think that's a safe bet there. Okay, Jeremy, we're at the bottom of our time. Back to you. Why don't you wrap it up for us?
Awesome. Stephen, thank you so much. To the panel, thank you. We've had over 700 small businesses dial in, you know, monitoring the comments and questions, hundreds and hundreds of them, great energy. Appreciate those of you who have participated on the panel and the small businesses. Again, we want to help. The good news with this group is 36% have been funded. 54% have either been funded or received a loan number. 95% of this group have applied. As Brent said, be ready to apply. If you're not hearing back from your bank, if you haven't yet applied, be ready, have your documentation ready to go once some additional funding is announced, which it sounds like there's a high level of confidence, at least on the part of this panel. Lot of interest in continuing the forgiveness conversation. You know, we'll do it, but we'll do it at a point in time where there is more clarity around some of the rules, some interpretations. And so stay tuned. We'll communicate back out, and we will resume the SMB series for Silicon Slopes next Thursday at 5 p.m. We'll send out an invite early next week describing the topic and the panelists. Until then, thank you, and we wish you all the best.